Well, good evening. Tonight is Tuesday, June the 19th, and this is ECP 3703 Managerial Economics. We are holding class to go over the financial calculations, and we have one student present and a guest. So, what can I do for you?
Well, I think I answered my own question. I had questions about when to call it a lump sum and when to call it an annuity, depending on the way the question is worded. So it seemed like
If the question gives you any indication of recurring payments,
then it's going to be
got
an
an
annuity.
annuity.
Yeah, so it's going to have to be annuity then.
Yeah.
Okay, and then the other one was we talked about when we're doing the lump sum and we compound interest like quarterly,
Yeah.
then we're going to divide by how many periods are within the year.
Yeah, if it's got, as an example, quarterly compounding, then whatever n is in years, let's say 6 years, well, you're going to do it 4 times a year.
Okay.
So you're going to multiply by 4.
Right.
And whatever the interest rate is that's quoted, it's generally quoted on an annual basis.
Right.
And so if the interest rate is 5%, we're going to divide it by 12. And with this particular calculation, it's easier if you put in the calculator exactly 5 divided by 12 equals, and whatever number shows up, put that in for IY. Because it's rounded out, so go ahead.
Okay, so, and the answer works out, but when you're doing an annuity,
Mm-hmm.
and you're doing your payments, let's say this guy, like in question 3.
Okay.
In question 3, it talks about this fella.
Let's go ahead and just do that one for an example.
All right.
This is on which handout?
The sample, it's going to be problems 1, the very first sheet.
Sample problems 1. Right?
Yeah, sample problem, the sheet 1, and it's question number 3.
Sample problems, sheet 1, question number 3. Okay.
So it says Harold, he begins a saving program after college, depositing $200 a month,
Okay.
and the interest is 7% compounded annually. He does this for 30 years.
It says compounded annually?
Yes.
I should
Yeah,
not have said that.
7%.
Because it's not going to be in our calculation. And what else?
For 30 years.
For 30 years. Okay. When I give you a monthly payment, my assumption is it's going to compound monthly.
Okay.
We
All right,
can't-
because there was a
can't do-
disconnect there.
Right, we can't do monthly in one element and then annually in another. So strike that word from the problem and make this also monthly. That's badly worded on my fault.
Okay.
Okay?
All right, then the way I work with the calculator, I can start with my payment, which would be,
Someone in email asked me, show me the formulas. I don't show any formulas per se. If you wanted to do this with formulas, it's a freaking nightmare. My idea of formulas is where do you put what? And so what we're going to do here is for the payment button, I'm going to put, and I'm going to make it a negative 200, just so I have a positive answer.
Right.
That's no big deal.
Okay.
My interest rate is going to be 7 divided by monthly, so 12, and whatever that number is, I just press the IY button. And then my number of compounding periods is be 12 times a month times 30 years. So 30 times 12 is 360. That's
all
the
right.
formula, if you like.
Okay, yeah. All right, so that's where I was getting lost because,
Because you were trying to keep that at 7?
yeah.
Yeah,
I'm
and it
how
just
can I do
gives you-
that if I,
Can't. That's why it's my fault. Poorly worded.
okay, gotcha. And then I thought that if I just did negative 2,400 instead of negative 200,
Which would be as good an approximation as you could get, because if it's going to compound annually. But my intent, again, when I show monthly payments, is monthly compounding, because you got to stay with one or the other
Right.
as a
Because the
basis.
thing is that if I'm paying it monthly, then I didn't have the whole amount there for the whole year.
Right.
And
It
it's
wasn't
just
getting
not gonna-
anything.
right.
Exactly. So then you're going to calculate future value. You got that in front of you there?
Yeah, but I I could do it now
Okay,
because what I
let's
have
check
here
it and
doesn't,
decide.
okay. All right.
And again, we want to clear our calculators before we start any calculations. 200 is my payment. That's my interest rate. That's my term. Compute future value. I got $243,994 and change. Yeah, about 20 cents on change. And you might want to check my math to be sure I'm close.
243,994?
Yep.
Yeah, that's what I have too. Okay.
Good.
All right, that, I just didn't know what I was missing there.
Okay.
I think I'm pretty comfortable with this then.
Okay. And forgive me, ma'am, I don't recall your name.
I'm Liz.
Hey, Liz.
Hi.
What's your last name?
Cowart. C-O-W-A-R-T.
Okay.
I'm on your online course.
Great. I'm glad you're here.
Yes.
I appreciate
it.
Somebody coming in and meet me, you know?
Yeah.
How are you doing with the calculations?
A little shaky. That's why I figured I'd come in and kind of listen in.
Okay.
I'm an
How are you
auditory
doing
learner.
with this calculation? Do you follow what we've done?
No.
Good, an honest answer.
Yeah.
I'll-
I'm lost, but
I can work with that. Okay. Our situation was, we're told this fellow's gonna save $200 a month.
right.
And the first thing that should jump out is, we're gonna be doing payments, not lump sum.
Right.
And it's gonna be on a monthly basis. So everything in the problem is gonna be a monthly basis.
Right.
So then they say, the interest rate he's gonna earn on his savings is 7%, but this interest rate is usually the annual rate per year. But we're not going to compound interest annually, we're gonna compound it monthly. So the 7% has gotta be divided among 12 months. So when you put it in the calculator, literally, push the button 7, push the button divided by, push 12, push equal, and whatever number appears, usually I keep my calculator on 4 decimal places, it doesn't matter. Whatever that number is, push the IY button. So it goes into the right register.
Okay.
Okay, 30 years, but it's gonna compound once a month, 12 times a year. So we're gonna multiply that by 12. And so our N is gonna be our 360. And so now we've put in the payment is 200, except I changed it to a negative 200. Because the calculator is set up to think in terms of money coming in, money going out. So it says, well, if you're gonna have a positive payment, you're gonna have a negative answer, or vice versa.
Right.
So it doesn't matter whether the negative comes up here or it comes up here. Where you really get in trouble is when you're solving for one of these. Sometimes they'll ask you, if this didn't happen, what would be the interest rate? Well, if you put both numbers in as a positive number, you get error 5, which I know very well, okay, having done it a million times. So anytime there's a payment and a future value,
One of them has to be
one of them's gonna be negative.
negative.
Yeah.
Okay.
Okay, and there's a change sign button right down on the
Yes.
bottom of the calculator. You just put in, what is it, 200 change sign, and then payment, P&T.
Okay.
Okay, we're doing okay so far?
Yeah. So just real quick,
Yeah.
7 divided by 12,
Mhm.
and then that answer you would do the I of Y.
Right,
Okay.
and I didn't even look at what the number was, I just threw it in the register. So see what you get. If you don't get the right answer, let me know. You got these 3 numbers in?
Yes.
Okay. Then how do you do the calculate? You use the compute button up at the top.
Right.
You're gonna go compute future value.
Okay. Sorry, I'm late.
No problem.
Okay.
You do that, take your time.
So I think I have the wrong calculator for myself.
Oh, that'll make it a change.
I've been using my son's,
Yeah,
and I wondered if I can use this one like my son's, but I guess like I have one like that at home. It's actually his.
because I don't know how to use that one that you've got. What is that?
The T183.
TI-83. I have
ATI,
no
rather,
idea.
sorry.
It probably has the functions in there, but you would need the owner's manual to sort it out.
Okay. You've lost a lot of weight since I've seen you last.
Well, God bless you.
You have.
I don't think I have, but
Yes,
it's
you,
nice to think so.
yeah. you
It's this
helped me
beard,
in the
makes my
process.
face look thinner.
I like it.
How are you doing, Liz?
Could you come and see what I'm doing?
Okay. See, I forgot to tell you the most important part. Before you do any calculation,
Okay.
you gotta get all the other numbers out of the register.
Okay.
To do that, you get separate. And the number of cases is clear TVM, that clears all the registers.
Okay,
Do that, I do it 2 or 3 times. for your calculation.
just to be sure. Okay,
Now, put the numbers in. We said 200 is gonna be our payment,
right,
but we want it to be a negative number,
right,
so here's my payment.
okay,
My interest is gonna be 7 divided by 12 equals, whatever the number is.
oh, okay,
And then if we take 10 times, or 12 times 30,
12 times
so
30.
that's 30, 360 is my unit for payments. Now I've loaded this register, and this register.
Right.
Okay, so compute. This one.
That all makes sense.
Good, that's,
I got
that's
it.
the aha look I
Yeah,
love to
I
see.
did it, I
Great.
got it.
Okay,
Okay.
good. With that in mind, let's try another one with some payments. Any other questions so far?
Is that from?
This is from
Modules.
sample problems sheet 1, question number 3. If you want to copy this down before we go on, or?
I don't want to hold you up though.
It's okay, it'll take you but a minute. This is the part you really need to copy down, right down here. Oop, yeah. It's gonna work.
And this was in the module, right?
This is, yeah, sample problems are all in the module.
I printed it, I just have.
Good. You solve for 3 numbers to put in the calculator, and then you ask the calculator to calculate the bottom number.
Is that a negative 200 for payment?
Well, when you're using this and you're saying, I'm gonna put this much in every month, how much will I have? The calculator wants to think in terms of money out of your pocket, money into your pocket. So if you think of it that way, this is a negative number and it'll give you a positive answer. If you put this in as a positive number, it'll give you a negative in front of this.
Understood.
You can ignore it.
Thank you.
Okay. I can erase now?
Yes.
Okay. Let's do a variation on this problem for a moment, just to illustrate the idea of positive and negative input. Suppose I said, look, I've got 10 years, and in the end of 10 years, I want to have $84,000. I can afford to invest I'm going to make up a stupid number, I always do. I can afford to invest $5,000 a year.
What interest rate do you need to get?
What interest rate do I need to earn in order to achieve my goal of $84,000? Crank that camera in just a little closer. So what is it I want to do? I'm going to put this into my calculator by saying in, put in the number 10. Notice this is not a monthly, quarterly, semi-annual, it's an annual basis. Then I'm going to put in my what? Tell me what to do next.
Your future value.
My future value is what?
84,000.
That's what I want in the future, 84,000. Should I put that as a positive or a negative?
That's gonna be positive.
Why?
Well, because your payment's gonna be negative because that's money going out.
Okay, if you like to think of that way.
So payment's gonna be 5,000.
So payment, see, when it says per time period, we know it's a regular every time do that, that's a payment. So my payment is indeed $5,000, but remember what we said. If future value is positive, payment's got to be negative. Okay? Money out of your pocket, money back into your pocket. So I'm going to put negative, or I'm going to put 5,000, change sign. There's a change sign button at the bottom of your calculator. Change it to 5,000 and then press PMT. So what am I calculating?
Interest rate.
I want to know, so this is my sign for do the calculation, got them an apostrophe. Calculate the IY. What is my interest rate? What has it got to be?
Eleven.
11.09 or thereabouts
Yeah.
percent. That's the solution I was looking for.
So when we plug it in the calculator,
Mhm.
I'm still shaky on
That's
that one.
okay.
We put N10,
Mhm.
then we do 84, F would be 84,000.
Good.
Then payment would be negative 5,000.
Yep. And then compute, CPT, top button on the left.
Uh-huh.
Compute IY. So this little apostrophe really means press the CPT button at the top of the calculator.
But when you put it in your calculator, you're actually putting a number, like the value, and then putting in, like I'd go 10, then hit N.
Mhm.
84,000, then hit FV.
Yeah,
Right.
I don't want to put FV and then the number.
Right.
I gotta
Yeah.
put the number and then the FV.
Oh,
the-
see,
right.
that came up under
Perfect.
like an error.
Perfect. Okay, good.
Okay.
You figured it out.
So you did N first, then 10?
Doesn't
Yeah,
matter the
you don't
order.
have
Doesn't
Doesn't
matter
matter
what
the
order.
order.
Just make sure if you want to put in 10 for N,
Uh-huh.
don't press N 10. No, press 10 N.
Then N.
I see.
Perfect.
Right.
Okay, that made more
It
sense.
never occurred to me to make that clear, but it's easy to
Yeah,
read
no,
it the wrong
I
way.
needed that one.
No
Okay.
problem. Now, what was the first thing you're supposed to do before any calculations?
Clear.
You do second, the second button, the little yellow button at the top, sort of, and then you press the FV button because written above FV is CLR TVM, which means clear the time value of money registers. Take all these registers where you store numbers and make them all 0. So I'm not working with old data from an old problem. So I clear my calculator first, then I input my data, and then I say compute what I want to know. All you got to do is do it 1,000 times, and it gets to be real easy. Yeah. So Liz, did you get the right answer?
I keep getting an error. Error
Okay.
5.
Error
Keep going
5,
again.
my error, name for Strickland, yeah. Because one of these you didn't put as a negative and one as a positive.
I thought I mean, I put
Let me see how you
5,000
put
as
it in.
negative. Can you look? Okay, so I do 10 first.
Clear.
Oh, clear, clear.
Good.
Okay. So I do 10, then we do 84,000 as F. Then 5,000 as payment, and then compute. Oh, well, of course it did that when you were here. Of course. worries.
It's amazing, you know. I've gotten into classes like this and had somebody do it 6 times,
Yeah, till you look.
and you don't even know what you did wrong. That's the trouble.
Got it.
All right, how are we doing so far?
Good.
Okay. These are all what we call annuity problems because they have a regular payment. So much per month, so much per quarter, so much per year. Let's do a different one. Suppose that I said my goal was to have $16,000. And I know that I can earn interest at the rate of 8% per year. I've got 5 years to make this happen. How much money do I need to put in the bank today in a lump sum? And once again, second clear to begin.
So N would be 5.
Good. Let's put that up here. In, I got 5 years.
F of B would be 16,000.
Good.
Okay.
I know that in the future, I want to have 16,000.
And I of Y would be the 8%.
IY would be the 8%, just the number 8. And what am I calculating?
Your payments to yours, how much you're.
I'm only going to put in a lump sum one
Oh.
time. So what would I call that lump sum?
It's your present value.
One lump sum present value.
The PV. Okay. That's what we're trying to figure out.
Yeah, and mostly the reason I wanted to do this is I want you to recognize what that sum present value is trying to say. This is a single amount. How much do I have to have? And when you do that, tell me what you got.
I have a question.
Sure.
Which number has to be negative?
I'm going to see what you give me for an answer first.
I guess the 16,000.
Well, I don't know. If you put it in as a positive, what did you get for an answer?
Something crazy, so I'm gonna do that
Oh,
again.
no, we're not that crazy here. Come on.
Okay, I'm gonna do that one more time.
What'd you get?
I got a negative number, but it's
Yeah.
0. I don't know why
Okay.
that's
Clear,
0.
clear your registers
Okay.
and put these numbers in again.
.008, is that what you're putting for interest rate?
No, just the
Just
number
8.
8.
Okay,
Just the number 8.
calculate.
Compute PV.
What did you get?
10,889
Yep.
and change.
And you get a negative number
And it would be negative.
because you had a positive number for future value. Okay, try again.
This is not gonna work.
Okay.
But
Don't you
I
use
have
the right-
used the right one at home. I just,
Okay, well, this will have to practice then.
You have it on your phone?
Yeah.
How do you do that? You download it?
You pay $30 for it or something.
Okay, so I don't have to go out and get another different one, because my son uses this for his class, so I borrowed it to do some work at home, but.
I don't know I don't think they're gonna let you use it on a phone.
Oh, yes. Okay, thank you.
So I would arrange to have his that day and to practice with.
I will.
But go ahead and use mine to.
I appreciate it. Thank you,
Sure.
Professor.
Sure.
B represents
Present value.
present value, and that's what we're trying to calculate. So when I hit the CPT button, then it would be PV.
Mhm.
Hmm. 5 years, 5N, 16,000. You guys can go ahead without me. I'm like
No,
lagging behind here.
no, because
We are
then,
not in a rush. We are all learning together.
Okay. 5N, 16. I 8% for IY,
just 8. Yeah.
just 8.
Mhm.
CPT, PV. Oh, got it.
Oh, I love that look on your face.
I got it. Okay.
In Georgia, we don't look that way. We just go, damn. Same thing. I got it.
Yep, I concur. Okay.
And ma'am, I've forgotten your name too. I'm
I'm
sorry.
Christine Rodriguez.
Christine.
Yes.
Good. How are you doing with that? You tracking?
Which is the correct complete button? I'm so
The
used to using this.
CPT button in the upper left.
Okay, that's what it is. Thank you.
Make sure you're good with this.
I am.
Okay, good.
Thank you.
Mm-hmm. All right. You got another?
All right. Well, can we look at the return on investment problems?
Tell me
We have
how
like
one of
a
them.
Rose invests 20,000 in real estate deals and earns 400 a month for the first year.
What problem set are you on?
It's the same sheet and it's
Okay.
question 5.
Sheet 1, number
Yeah.
5. You're talking about sweet old Rose. Okay,
Yes.
good. And Rose does what?
She invests 20,000 in real estate deals
Okay,
and she earns 400 a month for the first year.
okay. She gets 400 a month for the first year. Okay.
And then the question is, what is her return on
What
investment?
is her return on investment? And this is a term all of us need to be familiar with, comfortable with, in terms of what does it mean? Return on investment. Sometimes people say, well, that means made, overpaid per year. It's always an annual rate. And if you think of that, what did she pay for the investment? She paid $20,000.
Mhm.
How much did she make the first year?
4,800.
$4,800. So just calculate that ratio or that percentage, 4,800 over 20,000.
That's it.
That's it. What'd you get, by the way?
I haven't, I'm still.
Yeah, it takes time to write it down before you can do the button mashing.
24%.
24%?
So it's
Yeah,
always
2 to
expressed in a
48.
percentage.
I'm sorry?
Return on investment is always,
Is always an annual percentage. So we kind of stepped off the track here to do the return on investment, but it's a very basic concept, not a big deal.
okay, so if you double your investment a year, it's at 100%.
Uh-huh.
Yeah. All right.
Well, we're going to do that with a calculator in a minute.
Okay.
Okay. We'll make sure everybody else is okay with me. Good. Okay. Look at this next problem. Jim starts out with $10,000. And in 6 years, he's got $20,000. What was his rate of return or interest rate per year? You can use the calculator function now. starts with 10,
Mhm.
invests it and waits 6 years, and in 6 years it doubles. What was his return? What was the interest rate he was earning? If you get error 5, I'll know why.
12.2.
So you've taken this class before, right?
Hmm?
No.
No, but
Impressive.
obviously he's been working on those videos and handouts.
Yes.
Well, it's just these keys straight across.
Yeah,
For what we're doing so far, it's just these keys.
pretty much
figure out
it.
Which,
That's pretty much it. What do I
Yeah,
put
so
under
that's-
each key?
yeah. Mhm.
Very good.
See if you got 12.2, give or take.
I got error 5.
There you go. I win.
Wait, why do you get error 5 again?
Because you put one positive and the other positive. You got to put one of them
Okay.
negative.
Okay, you got me. You got me. I forgot about that.
Good, good.
Okay.
It's good this is not a drinking game, or you'd have to drink, you know?
I'd be, yeah, rolling around.
We learned that. Me too.
I got 10.9.
So
F of
the,
V is 10,000.
No, that future value is
Future
20.
value is 20. That's, okay,
10 is the present value.
that's right.
Good.
Okay,
And let me note that.
Okay.
Present value in future
got
value
it. Okay,
calculated.
have my numbers and stuff.
Okay. When you finish, leave those numbers in your calculator for a minute.
yeah, so actually with doing these, like the lump sums or the annuities, really you're using those same keys and you're using
You're
the
either-
payment for the annuity ones
Or present
or
value.
either one of the, either present
Yeah.
value or future
or
value.
Future value.
And with the lump sum, you're not going to use a payment, just the other ones.
That's right.
So,
Once you recognize a pattern, it's like,
Mhm.
no problem.
yeah. But then, like, I still look at some of the questions and I'm like, wait a minute,
That's the challenge, is interpreting the question in terms of,
right, that's the thing that's
that's
hard.
just a function of
Figuring,
practice.
yeah, yeah, I agree with that.
You're still doing awesome.
Yeah,
Right.
I got the answer.
Okay, leave those numbers in your calculator,
Okay,
but I want you to go change, I want you to put, for the time period, I want you to put 12 years. So just put 12 in and compute IY again.
Oh, wow.
5.95.
How many?
5.95.
5.95, okay.
So you could just change one of your factors here just by doing that.
Yeah, the calculator says, I got 4 memories here. Okay, I got something here, I got something here, I got something here. Yeah, I can calculate that for you.
Wow.
And they stay there unless you change that number and says, oh, okay, I'll recalculate that for you.
And that's why you have to hit your second and, okay.
Yeah, I was gonna start over, click the clear again.
Here's the secret of what we just did though. If you take the amount of time it takes to double an investment, okay? And if you divide that into the number 72, it will tell you the approximate rate of return.
It's rule of 70.
If you double your money in 12 years, must be getting around 6%.
It's only 72?
It's called the rule of 72.
Yeah.
It's not
For that,
72 years, it's
and
not
like 100 years,
72%,
yeah.
but here's the way we usually write it. We say, what is my interest rate? Okay? Divide that into the number 72, and that will give me the number of years to double my investment. The rule of 72. This is for any compounding. If, for example, inflation was at 8%, prices are going up 8% every year, how long will it take for prices to double? 8 into 72, it'll take 9 years. In 9 years, prices will double. In 1979, the rate of inflation in this country was 12%. At that rate, prices would double every
6 years.
6 years. Think about that. What if your rent doubled every 6 years? What if your mortgage payment doubled every 6 years? Because wages weren't going up that fast. Now, one more thing. If the rate of inflation is 8%, but you got a pay raise of 5%, what does it mean?
Right, that's our problem.
It means prices went up at 8%, but you only got 5% more money. How did you do?
You lost money.
You lost how much?
3%.
You lost 3%. That's the rate of growth of your income. Your real income, it's not growing, it's declining. Its rate of growth is negative. You see what so far? Take that rate of growth, divide it into 72. Minus 3 into 72. What do you get?
19, almost 12, and 20. almost
2, 4.
24.
In 24 years, your income will have cut in half. It will only buy half as much.
Which is why we have 2 people working in households in the U.S. now, compared to like when it used to be 1.
Interestingly enough, women really started going into the workforce in the late 60s and particularly the 70s. Inflation began to start accelerating in maybe about 74. So part of it was women coming into the workforce because of increasing costs. And then another part of it that I witnessed from stories was people wanted a higher standard of living. And they said, well, we get daycare, or we let mom take care of the kids, or, grandmom take care of the kids. And so, yeah, exactly what happened. So it works in reverse, too, when you're losing on your investment. So that's the rule of 72. And honestly, I don't remember if I assigned it in all this work. If you run across it, you'll know it. But it's kind of a helpful little rule of thumb. It's not precise, but it's a good rule of thumb. Okay.
I used to sell life insurance, and people were talking about that rule of 72 all the time.
Yeah.
But the thing is that you could throw the number around, your money's going to double in this many years. But, you have to look at what's the guarantee. What's really going to happen.
Yeah, and what's it, I want to make 8% every year?
Right.
Want to bet? What are you investing in, Okay. Before we run out of time, I want to show you what I think of as the premier problem for time value of money. And I call it the retirement problem. Not because I am old, although that is very much on my mind, but the retirement problem. And so we got Jim here, and Jim is 24 years old. And Jim's sitting around thinking about the long-term future. And he says, I think I'm going to plan to retire when I am 66 years old. So Jim's looking at a working future of what, 42 years. And then Jim says, when I retire, I would like to be able to pay myself a pension out of my 401k or whatever of $2,000 a month. And he looks at the stock markets and the bond markets and all these investment things. He talks to his friends and advisors, and they say, you should probably average over your working life, you should probably average an annual return of about 8% per year, always on an annual basis. Now, given this, and given this 8%, what we want to ask is, how much does Jim need to start contributing to his 401k today so that he can retire? But we need one more piece of information.
How much does it mean?
No.
Or,
He's going to retire at 66 and start pulling money out of his pension fund. The big question is, how long is he going to live?
true.
And so he goes to the actuarial tables, and they say that he has an expected life. Jim's going to live to be 85 years old. Now, a lot of this is what we in economics call a WAG. A WAG is a wild-ass guess. It's just a guess, but at least it gives us an approximation. The reason I think this is a premier problem is because you have to know how to interpret it, how to look at it. So if you imagine Jim today at age 24, imagine Jim at age 66 when he retires, and then imagine him at age 85 when he passes. Okay? What we've got to figure out is if he wants to get $2,000 a month, and he wants to get it for how many years?
19.
19 years.
$38,000.
No, don't lump sum it.
Oh.
That's where you can get in trouble. He's going to need to draw that out for 19 years. We're going to imagine that whatever money he has is still earning 8% per year,
Right.
except for the money he takes out. Of course, that's gone. So he's got an interest rate here of 8%. What do we have here so far? We have what?
The interest rate.
What's the 2,000? It's no, it's per month. If it's every period, it's a payment.
Payment. Okay.
So we can say, well, he's going to want a payment of this, and it's on a monthly basis. Aha, you got to watch for that. So 19 years times 12, right? That's complicated. What's that? 228?
No.
19 times 12?
228.
So he's going to get 228 payments. And his interest rate is going to be also on a monthly basis. So 8 divided by 12 gives him his IY. You with me so far? What are we calculating? This is the most important part to the question. What are we calculating?
His present value at age 66.
How much money he needs in the bank at age 66, present available to him, so calculate the present value. Do that first. We're only halfway there, but do that first. Let me move my camera.
Because then we got to do the first half.
Yeah. There we go. You want to get a number yet?
The value of N is
Of N, he wants what? One payment a month for 19 years. So this is it.
28.
Good.
And then
What'd you get?
16,000? No, that's not right, is it?
You could have slipped a couple decimal points, you know. Remember what? If you put this in as a positive, this will be a negative. No big deal. We'll make those numbers go in correctly. 2,000, 228, and whatever 8 divided by 12 is, 0.666. That sounds good. 2, 3, 4,
Yeah.
1, 8, and I'm just going to leave it there. We don't worry about the little pennies.
Yeah.
Confirm?
$234 and $54. A little bit different.
And 0.54.
Yes.
What did you use for the interest rate? How did you calculate it?
8 divided by 12.
8 divided by
In
12
parentheses.
equals?
I did 8 divided parentheses, 8 divided by 12, parentheses, then hit the IY.
Why are you using parentheses?
Because,
Try it without the parentheses and tell me what you get.
okay,
Just 8 divided by 12 equals and whatever that number is.
all right. 234,054.
054, okay. How many decimals is your calculator set to?
4.
Okay. Well, is your calculator set to 2 decimals, right?
Yeah,
That's the difference.
okay,
Either answer would be acceptable.
okay.
If you got 054, that's still, in the scope of things, pretty damn close anyway.
Yeah.
But it's just a rounding error. And when I grade the exams and I see your answer comes up this close, no problem, you got it.
Is there, should we have it set to 2 maybe, since we're talking about dollars and?
I set mine to 4. So when I calculate the answer sheet, it's set to 4. But I accept the tolerance around
Okay.
that.
All right, if we wanted to change the decimals, is there a shortcut to change the decimals?
Yeah, I'd have to look at it to
All right,
remember.
let's
We'll do it after class.
look it up, okay. All right.
Always in the owner's manual. How are we doing so far? Everybody tracking with me to get this number? Okay. So, Jim, by the time you get to be 66 years old, buddy, you got to have 234,000 and change in the bank. You got that? Oh, damn. Okay, let's figure out how to make that happen. Let's back up now to today. And what do we know? We know that in the future, your future value that you want to accumulate is 234,000, well, call it $189. Okay? That's what you got to get to, buddy. Oh, damn. Okay? And here's how you're going to do it. Your interest rate, we assume, is going to be this constant 8% per year, but you're going to be making a monthly contribution to your fund, so divide by 12. Same as you just did, 8 divided by 12. Put that in. And how long have you got to do this, Jim?
42?
42 years. So we're going to make you, or you're going to make a payment once a year, once a month for 42 years. So 42 times 12 is your in.
504.
Okay. What do you want to calculate?
Payment.
Calculate the payment. Compute the payment. Tell me what you get.
$56.84.
5684 is all, that's pretty good. Anybody else confirm that?
Double check. Yeah,
$56.84.
that's not difficult.
If I could go back to 24 years old,
Right.
then that would
If
be.
I was only 24 again and started, and this is what, when we teach this, we just get all excited about it because this is the power of compound interest. You're putting a relatively small amount every month, and that's like hiring people who work for you 24/7, and you don't even have to supervise them, not very closely. It's amazing. Now, just for grins, let's look at this and see how it changes if we made one difference. What if instead of today being 24, Jim is 34? He still needs that same amount of money. So all of this is the same except what?
The end is not 42, it's 32.
We change the end to 32 years times 12, and then we recalculate the payment. You don't have to input all that data again, you know.
I know, I pressed clear though. Because I'm not used to it. $132.
$132 a month. Give or take.
It's a lot more.
It is more. And you should say, Jim, don't be stupid, okay? Because for $80 less, give or take, you can start now, and it's a whole lot. And think about how much is $56 a month 10 years from now when your salary has gone up? This is going to be like, don't even, I spend that much, going out of happy hour. 6 days a week, yeah, whatever. Think about it. This is not a burden at all over time. Well, what other people do is they rationalize and they say, well, by the time I'm 34, I'll be making more money and I can afford 132. And it sounds good, yeah, except I know who you are, Jim. You're lying to yourself. You won't start it then either. Just for grins, don't clear anything. What happens if Jim turns 44 before he starts? Just calculate over here. What? 22. Use 22 times 12. And then tell me what his payment becomes.
$326. Is that right?
Sounds good to me. I just work here.
It's not doable.
Well,
Not in real life.
so Jim, if you wait till you're 44, you got to start saving $326 a month. What do you think Jim's going to say to that? Well, by then I'll be making so damn much money, that'll be easy. And he will lie himself into his future until he gets to the point where he's not 44, he's 54. Can you do that for me very quickly? Let's let good old Jim get to be 54 years old and see just how smart he is. 54 years old, you're gonna need,
Ooh, yeah, I got that wrong. I had to clear it.
ah,
I messed up.
okay.
$973?
$973 a month. Now, I'll tell you something. If Jim lies to himself and believes it, and he procrastinates this far, what do you suppose has probably happened in his general behavioral traits and to his income? He procrastinates and refuses to take the pain until he probably is not making a hell of a lot more at 54 than he was at 44. And this becomes another totally impossible goal. This is the plight of so many baby boomers today who are hitting their 60s and looking at, gee, I was going to retire at 65. No, you're not, Moose Breath. You can't afford to. You're going to be working until you drop dead because you kept putting it off. And let me mention one other thing. This is kind of a propaganda speech, but you don't have to necessarily put it in the stock market or mutual funds. You can go buy real estate. You can invest in collectibles, whatever, But for goodness sake, suffer the little bit of pain today. Get through the next 10 years and there's no pain at all. And you're done.
Would you suggest, because I have my 457 plan, but I am too fearful about doing high risk investment on it. So I'm just doing the take 5% of my check and pay period. But I'm not.
And where does that money go?
It goes into my account. My
And
retirement.
who manages that account? A bank?
Yeah.
You know what interest rate you're earning? If it's in a bank, you're earning less than 1%, probably.
Probably.
So it's a miserable way to save money, except you're saving money. But the point I would make, and this is, see, when you started to say, well, what should I do with this? My next question usually is, how much are you gonna pay me for my advice? Because, you see, I'm not a financial advisor.
Right.
All I'm talking about is common sense.
Right.
And I would tell you that as a general rule, the stock market has performed, not going to, has performed, give or take 8%.
That's pretty good.
And so you could take that lump sum that you've accumulated so far, let's say you've got $5,000, you could invest that into a mutual fund,
Okay.
which then buys stock in multiple companies, so if one company tanks, you don't
Still
lose
good.
it all.
Right.
And you can choose a variety of different mutual funds. And then could be as the years go by, you say, well, I've got most of my first money in this mutual fund over here, and one of the mutual funds I'm into. And I started into it back in 2009 when our economy went to hell.
Yeah.
What happens when the economy goes to hell? We call it a recession. It means people lose jobs, their incomes fall, and they have to start living on a lot less money. So I took a major chunk of my money and put it into consumer staples. It's a mutual fund that buys stock in companies like Dollar General, Walmart, Target, because what's going to happen? Previously mid-level income people are going to find themselves shopping at those stores. And that did pretty well. So now you're 10 years down the road, you've got maybe 2 or 3 mutual funds, and you balance those and you move those as you need to if you stay aware of what's going on in the world. Or you go to a financial advisor and say, here's how much risk I'm willing to take. I want to get diversified. I think I'm interested in this industry, and this industry. The one that's kind of interesting today. Historically, public utilities have paid very regular dividends.
Right.
And so you put your plan into a DRIP program, dividend reinvestment program. And so every time they declare a dividend, you say, don't send it to me, put it back in. Now you got to pay tax on that dividend, okay? So you may have to pony that up out of your pocket, but it's not that bad. And you just let that money keep plowing back in. Utilities have been pretty good on dividends that way. Utilities today, guess what's happening? Utility prices have really dropped. They are kind of an attractive, in that way, purchase, unless you have a utility who's heavily dependent upon oil and coal,
Right.
because they're vulnerable. So there's always risk.
But they're just gonna increase the prices though, aren't they?
Well, that's
They're just gonna charge
why
the
I've got a
consumer.
chunk in utilities, because we say the demand for that is inelastic. Even if the price goes up, people still got to buy it, just like gasoline, and by the way, just like liquor. People
People
keep
have to
buying
have
liquor,
it, yeah.
or they think they
We
do.
always have alcoholics. Yeah.
Damn right, and poor guys.
Issues and alcoholics, so.
Call me a vulture, but but this is my point about you and I managing our own private investments. You don't necessarily have to do the investing, but if you do, you can do it intelligently. And if you're going to have a financial advisor, you want to be able to talk intelligently to that person. So you need to know what's going on in the economy. What industries are doing well, which ones are doing poorly. And as you always want to build that security blanket, low risk. But as you feel like you're doing well over there and suddenly you inherit $20,000, then you can say, damn, let's find something a little chancier with a better return if it doesn't die. And you start diversifying your risk that way. That's the future to me. And it's a simple, stupid ass little calculator that gives you the approximations on just what is possible. So that was more my sermon for tonight than anything else. I'm glad I finally got it on television and on video.
That's good.
We're about out of time. We have another class coming in here at 7. So let me ask you for some guidance. Do you want to meet again on this material? Because if you'll come, I'll come. But if there's nobody going to show up, I could be down at the bar somewhere.
Well, you can count on me for coming.
Okay.
I'm an auditory learner,
Okay.
so videos and listening and plugging it in, it's much more,
Well,
it's better for me.
the hell of it is to me, you're not unique.
Yeah.
And the folks that decide they can't come to class, you should see some of the emails I've gotten. They are struggling.
Yeah.
And then there are other people I've not heard anything at all from. And what do I think about that?
Makes you nervous, I bet.
They haven't done anything yet.
Sure.
So they're gonna open up all these videos and all this
Freak out.
and
Scramble.
try to figure it out 3 nights before the test. Because it's only one test in the school, one final. Okay, I will set up another Tuesday night, same time, and we'll smack it again.
Have you looked at the videos yet?
No, I have not.
Okay.
No, I've had company in town last week and this week, so next weekend I will sit down at my computer and I will fix myself a tall
Popcorn.
martini. And
I didn't think I would enjoy,
did you enjoy it?
creating it as much as I did. At
Good.
first I was like, I've never done this before other than, having fun with my video camera and my phone.
Yeah.
I really enjoyed it.
Good.
My son was involved, he's a student at Santa Fe, so he kind of prepared him for what's to come for him in the
Good.
future. Really enjoyed it.
I'm delighted to hear that. That's great. Okay, any other questions or comments?
Well, 2 weeks is the day before July 4th.
That probably
And
won't
so
work.
that's probably not, so maybe the 10th would be good.
The 10th may be
That'd
good.
be 3 weeks.
After the 10th, I'm hoping to be gone for a week or two, so
Yeah,
maybe
me
the
too.
10th will be
Yeah.
good.
Yeah, I'm out on the 11th.
Right now, I'm going to Alaska.
Are you really taking the cruise?
Yes.
Oh, I
Yes.
did that last year. Wonderful time. Excellent.
Wow, that's exciting.
We will tentatively aim for the 10th, watch for the announcements in Canvas, and I might do it a week before that.
Okay.
I don't know. We'll see. Okay, anything
Thank
else?
you.
Thank you
Thank
so
you, I really
much.
appreciate you being here. Take care.
Appreciate it.